program produced by the New Democratic Party, and we will be looking at different subject areas to assist students in St. Vincent and the Grenadines. This afternoon, we will be looking at the principles of accounts subject area. And this is an area that you should love if you're doing this course. It's very creative and it is very challenging, but not something that you cannot do. It takes practice, and the mantra in this is hard work and determination brings success. So as we go through this course, I want you to enjoy it. Keep your questions if you have any, and at the end of the session, you would submit them and we would answer them as we go forward. So you are supposed to know the accounting cycle. The accounting cycle shows the steps in the accounting process. I will just look at it for you here. So what we have here is our accounting cycle. And there are 7 steps in this accounting cycle. So we have our source documents, followed by journalizing, followed by posting to the ledger, then we extract our trial balance, we make adjustments to the trial balance, and then we have our final accounts. And then we move back to source document. Okay? So in the accounting cycle, these are the steps you take when you are recording any form of information. First of all, you must have your source documents. Your source documents would be things like your receipts, your bank statements. Those are your source documents. You're going to use those documents to put them in the journal, which is a daily recording of the information. From there, you would post to your ledger, which are records that are kept for separate items. Then you extract your trial balance to ensure that the accuracy is there. You make any form of adjustments, and then you would extract your final accounts, which are the balance sheet and the trading and profit and loss account for a sole trader. And as we go further for the manufacturer and the partnerships and the limited companies, we add more to the final accounts. Okay? So within the accounting cycle, after you finish journalize, you will post to the ledger. So you're supposed to know how to journalize, which we did in previous classes, and now we are going to post to the ledger. Okay, so what is the ledger? One you would ask. The ledger is really a set of bond books put together. It is kept for separate accounts. When we talk about an account is a separate item. Okay? And the ledger shows the increase, records of increases or decreases in any item that you have. In accounting, you must keep separate records. You cannot keep things all over the place. An accountant is really neat. And you must keep separate records for the items that you are recording. So what are the items that we record? It brings us to what we call the classes of accounts and the types of accounts that we have. So let us just do a quick recap, or for those who don't know about it, what are the classes of accounts? Now in accounting, there are 3 classes of accounts. We have real account, nominal account, and personal account. Those are the 3 classes of account that you have. And I am sure you would remember these easily. All right? Let's just recap what are real accounts, what are nominal accounts, and what are personal accounts. So real accounts. Real accounts we know are the asset account in an organization. Going back, just quick recap. What is an asset? An asset is anything that the business owns. So furniture, the camera, the telephone, if they buy the telephone. These are the things that the business owns. The computer, those are assets. So all assets accounts are termed real accounts. Then we have nominal accounts. The nominal accounts of a business are the expenses and the income of the business. That's all the nominal accounts. So purchases and sales and any revenue received will be nominal, are examples of nominal accounts. And the personal account are the accounts of persons or business that the organization itself deals with. Under each classes of account, there are different items. But what I will do, and what I like to do, is put them under the types of accounts, because they can be broken down into different types. So my acronym for the types of account is what we call ALICE. And ALICE should be your best friend in accounting. A for assets, L, liabilities, I, income, C, capital, and E, expenses. That's ALICE. So we can now group these under the different classes of accounts. So we have real account as asset account, nominal account being your income and your capital and your expenses, and your personal accounts are basically your liabilities. Again, just a quick reminder of the definitions of each of these. Assets are things that the business owns. Liabilities are persons or organization or any debts of the business. Income are revenue received coming into the business, what you sell, money coming in. You term that as your income or your revenue in some cases. Capital is what is invested into the business by the owner, either at the beginning or during the course of the life of the business. And the expenses are the things that the business would pay, the debts of the business. So each of these have separate items. And the separate items must be recorded individually. And that is how they are posted to the ledger. Now the ledger has a specific book. Okay, so you can go to any of the bookstore and you can buy a student ledger. It is ruled for you, and all you have to do is to put in the headings and you separate them as you go along. Very easy, very nice. And that will come in when we are going to put information into the ledger using what we call double entry. For our ledger, as I said, your ledger will be pre-ruled. So I'm just going to give you the headings of the ledger. Your ledger is divided into two sides, a left hand and the right hand. It's cut in the middle. So you have an open book and you cut your page in the middle. That's how the ledger looks. And there are rulings for different columns. So we have a column for our date. We have one for details, one for folio, and one for amount. I'm going to take off this section of the board. I hope you would have written it down so that when we have our assessment, you will be able to remember what was written there. So this is our ledger. We are pretending that this is the book and this is our ledger. We would have that. Let me just write it out properly. So we would have our date, a column, details, or what we call amount, or in some books, which is, it will write it up already, you will have particulars. They are all the same. We have a column for what we call folio, and we have a column for the amount. So this is on the left-hand side. And on the right-hand side of your book, it's the same thing. So you just continue. Date, details, folio, amount. And the columns are there for you. So if you have a ledger, your ledger will look something like that, pre-ruled. Now, this line here between the amount and the date that is started, there is your double line which cuts the page in half. And on this side, we have what we call debit, which is our debit side, or DR. And on this side, it's our credit side. So your left side is your debit side, and your right side is your credit side. I abbreviated it CR and DR. When we go further, we would get accustomed to this, and I would give you the meaning of it. So in your ledger, as we said, separate accounts are kept, and they are like this. They are drawn like this. So we have a separate asset account. If you can remember some examples of assets, what are some examples of the asset account that you would have? So you have computer, you have furniture and fittings, you have cash, you have stock, you have bank, okay? All those are examples. You have, for nominal account, you would have sales, and you would have purchases. For personal account, you may have the name Shevern, or you may have the name Oti and Sons. Whatever it is, you are going to put it, and that would be your heading up here. So the name of the account will go above here. So in our case, if we say that it is a cash account, on the line above where you start your headings, you will put the name cash. So that's the example of the asset account. If you have an account for bank, you will put it as bank. So as I said, individual accounts are kept. So for each item, you would have the individual account. So the headings would go for everything on your paper. So in this case, we would have a bank account. We might have a cash account. I would put it down there as cash. We might have an account for Shevern. I would put it there. Okay? We would have different accounts, and that is how you would put it in. The headings would just tell us exactly what is down there. So we don't have to head up again when we put in for a separate account unless we are going on a new page. But whatever information relates to bank, for example, will go into the bank account. So you have one bank account. If there is an increase in the bank account, if you go to the bank and you withdraw money, you're going to put it here. If you go to the bank and you deposit money, you're going to put it in that same bank account because that's your bank account. This is what you are recording the information in. So we have two sides when we cut our paper in half. Both sides give the same information, but one of the sides is what we call a debit side, and the other is called a credit side. And the debit and credit shows, and you have to remember this, it shows increases or decreases in any account. Okay, it shows if the account increases, in other words, or if it decreases. So when you get the ledger, you must clearly indicate which side is your debit side and which side is your credit side. And that's a question that CXE normally asks in multiple choice. All right? What is the meaning of debit, or what is the meaning of credit? And you will get a lot of answers there. Simply, the meaning of debit and credit is just to show an increase or a decrease in a specific account. And the specific account will have difference. Okay, so for an asset account, for example, when you're going to record the information, you must know which will increase and which will decrease, which side you're going to put it in. And if you understand that, you have no problem whatsoever in doing accounts. So accounts will never be hard for you. So just make sure you understand the increase or the decrease in an asset, in your nice friend, your Alice, and that's your foundation. You will be set. As I said, remember, hard work, determination brings success. And this is what accounting is about. So, when we talk about an increase or a decrease, and we're looking at debit and credit, we have to know what is the rule for entering these information in the specific accounts. So the rules are what we're going to learn now. And I'll take this off because you will have this in your already ruled in your student ledger. It's just to put in your credit and your debit. Some student ledger would have the headings already. Others, you will just have to write it in. So we're going to learn the rule for asset. Now I will draw here what we call a T account, which also represents the ledger. But it doesn't have all the details as it has. So I won't be putting in all the lines. I'm just using the T. It shows the ledger, and if you don't have a pre-ruled book, this is the easiest way of drawing your ledgers. I put in my debit side, and remember what I said my debit side was for any form of increase or decrease in an account. And this is my credit side, any form of increase or decrease in an account. We're going to learn the specifics now. So what we're going to do are the rules of entering information in the ledger. And my ledger here, I said, is a T account. So remember, we look at Alice. So I'm going to put in the rule for the asset. Any asset account that you have, if that asset account increases, you will make a debit entry. If it decreases, you will make a credit entry. So, debit in the form of an asset will represent any increase in the asset account. So I will put it here. Increase in account. And on the credit side will be decrease in an account. So we have cash. When cash comes into our business, it means that the cash increases. So therefore, we will make the entry on this side of the account. If we have to pay out cash, it is telling us that the cash that we have decreases, and therefore we will make our entry on this side of the account. That's when we start doing double entry. We will do all that. But for now, we only need to know the rule. And as long as you know the rule, then it becomes easier when you start putting in the figures. So let's just recap that. In an asset account, if there is an increase in the account, so you buy new furniture, it means that it increases. you will put the entry on this side of the account, which is your debit side. If you sell the furniture, it means that the furniture that you have in store now decreases. Hence, you will make a credit entry in the account. So to increase an asset, you debit. To decrease an asset, you credit. I hope you're following. So we have, remember, we have Alice. So that's the asset account. The next account is our liability. And remember we said that liability is defined as any debts of the business, any debts the business incurs. So it borrow a loan, that's a liability. It credits some goods from somebody, that's a liability. All right? So most of the time we'll have mortgage being a liability, an overdraft being a liability, and you would have the creditors being a liability, which you should be familiar with because those are things that you would have learned in your first lesson when they were introduced to accounting. So our liabilities, if our assets are things that we own, and to increase it we will debit, to decrease it we credit. When we owe people, it will be the opposite. So for a liability, let us say a liability account. To increase liability, we credit. And to decrease liability, we debit. All right? So an example of a liability would be creditors. A creditor is someone who the business owes. It means that the business has to pay that person. So when the business is paying that person, if I owe you $2 and I'm paying you $1, it means that you are decreasing, okay? So I would make a debit entry. But if I owe you $2 and I come back and I borrow another $2 from you, it means that I owe you $4. That means that our liability increases and therefore we will have a credit entry. Okay? So that's our asset, that's our liability. Then we have our revenue or our income. So income. And any income that the business receives will increase. So therefore, you make a credit entry. Any income, any money paid out will be an expense, and to decrease the income, we will have a debit entry. Decreasing income. All right, so incomes are things like commission received, wages received, and those things. So I'll just put an example here. Let's say commission received. And when you have commission received, means that, I guess you know what is commission received. You're working and you're getting the extra when you sell more. That's normally for insurance people, all right? Salesperson, they go out, the more they sell, the more commission they are going to receive. So when you receive a commission, it means that your money increases and therefore we'll put it on the credit side. And when it is paid out for the business, it will be debited, shows a decrease. All right, now normally as we go through, you will see some trends where some of these items, only one side of it is you would write on, you would make records on, and it becomes easier for you because the additional information is found elsewhere. So we have income, then we have our capital, and remember capital is what you, the owner, invest into the business. So we have capital. To increase capital, again, we will credit. And we don't really make an entry for decreased capital in an account called capital because it is in something else, what we call drawings. And as we go further, we will see where the decrease comes in. All right? So the capital account is one account that you will not have any entry whatsoever on the debit side, because you will find the debit entry in a new account which we call drawings, as I was saying earlier. So only one set of entry would have there, and that's something easy to remember. And accounting is basic standards, so wherever you go and you're dealing with a capital account, that's what you're going to do. And then we have our expenses. To increase an expense, you will debit. Increase. And to decrease it, you credit. So expenses are basic, okay? Just like your asset account. Any increase, and we know what are expenses, things like electricity, telephone, those things. Any increase, so I put telephone. We would make a debit entry, and any decrease, we would make a credit entry. And this is our Alice. All right? That's what the ledger is all about. When we are now doing the double entry, we would see how we put in that information into what we know here. But as we can see, as long as these are in your head, you are going to remember them forever. And please do, if you want to be the best principles of account student, remember these. Let's recap them. An asset is anything that the business owns, and to increase an asset, we debit. To decrease an asset, we credit. A liability are businesses that the business itself owes, or persons. To increase, we credit. To decrease, we debit. Income are revenue coming in. To increase, we credit, and to decrease, we debit. Capital, we said, are things that the person put into the business. So to increase it, we would always credit. And expenses, to increase an expense, we debit, and to decrease an expense, we credit. And that's basically what we do for our ledger. And as we said, the ledger comes after your journal. So when we are doing the posting, actually, it is actually to see whether our journal entries are correct or not. So, because we have to do a lot of corrections to it and so on. And that's why we make adjustments as we go forward. Okay? So basically, that's what we are learning for today. Quick recap. You will tell me debit, credit. And I have 3 columns. Item. Assets. When do we debit? When do we credit? Okay? Assets. To debit, it's when it's increase assets. Okay, so increase. And when we credit is when it decrease. All right? And we know that asset, if we have to classify it, it's a real account. So that's a summary of what you have done in this lesson. Liabilities. We debit when there is a decrease, and we credit when there is an increase. And the liabilities are basically personal accounts, because these are things that you owe. These are businesses that you owe, people that you owe. Revenue or income. We say we decrease when we have a debit entry, and to increase it, we would credit. And income is a nominal account. So this is the class of account. Then we have capital. We say normally we don't have an entry in the debit, but if it's an increase, we would credit it. And capital is a type of personal account. And our expenses, to increase, we debit, and to decrease, we credit. And expenses are nominal account. I do hope that you enjoy your lesson today on the introduction to the ledger account. When we meet next, we are going to now put information in the ledger as in the form of double entry. So please read on double entry so that when we come, we can have a very interactive lesson. If you have any further question on the lesson that we have for today, please send us a message on our Facebook page, inbox us, and we are going to get back to you, and we will address your issue either via message or when we come here next time. It was good having you. Do enjoy. Keep safe. Please keep safe and follow all protocol that are out there. See you next time. God bless.